What's good, everybody? Welcome to the Closing Beat. Happy Tuesday. Hope you're having a great day so far today. Well, the day's over, actually, so hope everything went well for you today. This is our stock market update show. We're financial advisors with Jazz Wealth Managers. We're not active investors, so don't let this show make you think we're active investors. We are long-term investors for people's retirement accounts, long-term investments. We manage Roth IRAs, 401k rollovers, you name it. And we want to be that financial advisor that only the rich people can get, where you have someone to call and ask for help on anything. Have them work through your 401k, have us look through anything financial that you need help with and decisions that you're making, of course. But we want to do that for everybody. So I hope you'll check us out at jazzwealth.com. Today is just a show that we do to sort of overview the stock market, the good, the bad, and the ugly. We try to make it fairly quick and then get out of your way and let you enjoy your day. If we can, we leave the opinions out of it, but we'll see what happens. Well, today was basically, I don't want to say that it was a non-event day, but it really wasn't that interesting of a day that will ultimately change the course of whatever happens. Like, it's not one of those days where someone's going to say, oh, remember last Tuesday when that happened, that was a signal that something was going to happen. Really not. I mean, it was a lot of back and forth, and if we learned anything from today, we learned that the political drama is about to start in Washington, and here we go. So we'll cover that a little bit along the way, but anyways, let's get started here. So on the right-hand side of your screen, you can see the stock market was basically flat. The Nasdaq was higher on the day, probably the better performing sector. I will maintain my comments that the market is not going to make up any ground, meaning bounce, until there's some sort of broad-based participation. Right now, for the second day in a row, everybody went to the tech names, those tech stocks that just keep trying to get the markets higher and have been unsuccessfully able to do that. So what we need more, I think, in my opinion, to sort of solidify a bottom in the short term is the Russell 2000. You notice it's not on the list. It was actually down again today. 2 days in a row it's been down. Well, it's been down more than that, but it's just not participating. You don't have the banks yet. You don't have a broad-based tech rally. You don't have the Russell 2000, which led the way down, so we have nobody thinking that there's a bottom in just yet. And so because of that, and now the political drama, I think you're going to find that there's a little bit more volatility still in the markets. We'll, of course, cover it as we go. Let's take a look at the charts here and just move right into it. So here's the Dow on the screen. If you like candlesticks, that's what you're looking at there. If you're one of our customers, you have no idea what you're looking at. We did a class, actually 3 classes on candlesticks. Happy to share that with you. If you're one of our customers, I will send you the links. Just let me know. Here's the Dow, trading near the lows, back and forth. At one point, the Dow, to start the day, was up over 300 points. It then went negative by 100 points or so, then went positive by 100 points, and ultimately closed lower on the day by 50. So volatility, that's the key word, right? Every day we're seeing these large swings as we come into the year end. And think about it, it's just people making adjustments. One of the Doe Show videos we're going to do this week is taxes and sort of preparing for year-end tax strategies. Real simple one, but you got a lot of that going on. You got hedge funds going out of business. You got mutual funds repositioning for the end of the year, because remember, they're going to send you that yearly statement coming up. They don't want to send you a statement full of losers, right? They want you to see everything is good, for those of you that dig in there. And so that's very common this time of year. You just have no reason to believe that yesterday was the bottom or today is going to push to new lows or new highs. There's just nothing there, right? It's just, there's nothing to grab onto. If you look at the S&P 500, same thing. We put in a decent reversal day yesterday after breaking the low. However, no follow-through. The follow-through will come when we have a broad-based sort of rally where the bulls go in and buy everything. And as I've been pointing out, that's just not the case. The Russell 2000 is a good indicator of that. Very, very close to hitting new lows. And just nothing, right? No sign of excitement. Compare the charts together. You'll actually see real signs of weakness compared to the S&P. Lower highs and lower lows compared to the S&P. So just not a good sign. On the new high, new low list, so what we do sometimes is we'll look through what stocks are making new yearly highs, what stocks are making new yearly lows, and you just kind of take a look at it and see what stands out. Is there anything that's standing out there? And today there was a little bit. You continue to have utility stocks, a lot of those hitting new highs today. So something you may want to look at. REITs, if you're real heavy in REITs, those hit all new highs. Symbol O was one that caught my attention. That one kept hitting the alert, new high, new high, new high. That's a very popular REIT that everybody likes there. On the new lows list, you got anything related to energy. So even though oil was a little higher today, energy stocks still a little bit lower. The producers, the transporters, the refiners, all sort of struggling still here off the off oil, natural gas volatility, and all that stuff. You had banks, a lot of banks on the new lows list today. That sector didn't participate. It just did not participate again. It's hinting at making new lows maybe as early as tomorrow. And then one that caught my attention, Michael Kors, new lows, down 40% on the year. Today lost 3%. So there's one of those sort of consistent downtrends that you don't want to try to buy. I'm not telling you what to do with your money, but that's what you got. Okay, so going forward, we've got everybody looking at interest rates, right? So you got the interest rate announcement coming up next week, Wednesday, Thursday, something like that. So will the Fed raise rates? Will they not? They kind of have to, in my opinion. I hope they don't, but they kind of have to. So we'll see what happens then. And then as we go through the different sectors, you had the price of oil higher by almost 2% today. Even oil's been really volatile, so 2% doesn't move the needle as far as coming out of a downtrend or trying to find any support. You had some Libyan supply outages over there. I think it was rather brief. So that's all that one was there. The chip sector did its part today, but again, it's trying, right? At one point, semiconductors were higher by over 1%, but nothing came along to participate. And so if you're looking at this market in the short term going, when are we going to bounce? You get no real good answer from today, just not happening. One of the semiconductor stocks that stood out was Broadcom, symbol AVGO, getting back up here to these highs there. Been real strong since earnings. They beat on earnings, announced a share buyback. They increased their dividend. I didn't write down how much, though, sorry. But getting a lot of attention there in the semiconductor space is this Broadcom stock, symbol AVGO, if you like looking at that sort of thing. Let's cover a few stocks here, and then I'll go through the sectors if you want. You got Ford, actually only finished up 0.25% on the day. Ford and General Motors were higher to start the day by over 1%, I believe, at one point. From news from Bloomberg that China was going to reduce tariffs on cars. Didn't that come out last week? Early last week. Wasn't that already something? So I didn't read the Bloomberg article, honestly, because lately they've been putting out stuff that turns out not to be true. We did a whole series of those articles that came out that turned out not to be true. And so we just don't know, like, what's going on over there. Is this true? There was no sort of comment to follow up on that from China. Right now, just basically a rumor. If you like retail stocks, DSW up about 8% on the day. It did close below the 200-day moving average, if that helps you. Earnings and revenue better than expected. They raised their full year estimates, which for a retailer is very important. If you're following retail stocks, there's still some left to report here. When they raise their guidance for the full year, all they're basically telling you is, hey, the holiday season's going really well. We see it happening right now. We think we're going to do better than expected. So because DSW raised their guidance, everybody thinks, great, last quarter was good, and you're telling us that you're doing well this quarter, you think you're going to beat. So stock gets a much-deserved 8% higher on the day. Under Armour fired 2 of its marketing executives. I don't know if you care about that at all. I can't wait for their earnings. I just can't wait for their earnings for them to say they reduced costs. I will touch it when it gets there, but that's that. Google, we've got added about 1% on the day. The CEO testified on Capitol Hill, actually did okay, if you happen to catch any of that. Remember, he skipped out on the meeting with Facebook and Twitter and all of them, so they put the empty chair there to make it, give him, to shame him and all that. So he came today, he testified for about 3 or 4 hours. I don't know, it seemed like it went on forever. But he did okay. I mean, he hung in there and basically took the punches. Stitch Fix down 21% on the day. Look, Stitch Fix, earnings beat, for the most part, all good. Customer growth is good. That's a big popular one there. Number of people using the customer growths. Or number of customers using the product. However, they made the comment that they were going to focus on upselling existing customers rather than try to put the focus on adding new customers. That's the first sign that, hey, they're having trouble getting new customers, so they're going to go try to make their money from existing customers. If you happen to be a Stitch Fix user, know that they are about to ask you to buy more stuff. So that's that one. Because of that, investors don't like that. We want to see that you are adding new people. Look at Netflix. You want to see new subscribers, new growth, new revenue streams. And there was not a lot of clarity on Stitch Fix there. Okay, Twitter quietly moving higher. This one really didn't get a lot of mention today. If you're a technical trader, you see the pattern on the charts there. You know what you're looking at. but up 3%, and at one point was up over 4%. So you've got these highs right here, 35.75, that Twitter has just managed to sort of stay out of the headlines, and just bulls have been creeping in there. Remember when I pointed it out on healthcare that nobody was talking about it, and just little by little you could see that money coming in. Twitter is sort of given the same look there. Yeah. Financial investor, you actually working today? He's not keeping up with the markets. He's got a job to do. A lot of those lately, by the way, positions that we've had to move because of buyouts, mergers, splits that we just don't like. So we've actually had a lot of them, investor, if that helps you. Stitch Fix, covered it. Mark, hey, how's it going? What's going on with Nordstrom? So very tough time of year for these stocks here. Nordstrom went through the whole idea of going private, and then this whole battle, that was months ago. And so going forward, take a look at these high-end retailers. Nordstrom, not only that one, Tiffany. You've got these guys just starting to lose, well, I mean, it's been months, but losing steam. Are people spending top dollar for all these things anymore? If you look deeper, you've got these companies actually physically burning and throwing away their products, like actually making them, like setting them on fire. No joke. Setting some of their stuff on fire so that it can't be sold at a discount, thus trying to drive up the prices of their existing stuff there. Not Tiffany, but more Nordstrom there. So highly discounted. And And if we look at retail in general, just been a weak sector, right? So one of those that started to sell off as well. Look to see if when we do start to recover, let's say Christmas is great. Everybody goes out and buys something. Where did they go? That'll be the thing that everybody focuses on in January. We'll do the same. But if everybody goes out and buys stuff for Christmas, did we all go spend a lot of money on stuff, or did we go to Ross, right? Did we go to Marshall's, or did we go to Tiffany, right? Or Nordstrom or whatever. So there's going to be that sort of thing. Did Walmart clean up, or did Target clean up? And so that'll probably, I mean, I hope it helps. If you own the stock, I hope it helps you that people go and spend a lot more money. What's your take on money market accounts? Do you need one, right? You could do like the liquidity and, ease of use of high interest savings account pretty much makes it a default these days. You got to just go with a high interest savings account. It's just too easy to set up. It's too easy to use. So that's probably where I'm at, I mean, for savings. How come you don't add the Russell to the chart? It's on the top. To be honest, over here, we could probably switch it out. But the Russell scrolls up at the top there on the data. I could put it over. I should put it over there, I guess. I also should put volatility. I like to look at volatility more. Financial investor, there it is. There you go. Got the right idea. Just started Roth at the end of September. Yeah, anybody that started after the summertime, hang in there. That's all I can say. You just got started at a point of high volatility. Whether you're one of our customers or you're somewhere else, know that happens, right? Back in February, we had a whole bunch of people start investing in January. They're like, yeah, new year, going to start my IRA, and then boom, you got that quick decline. Go back and look at that sort of time period just to build confidence that you didn't just invest in something that's going to disappear and you're all done. Now, if you pick pot stocks or you pick like Take-Two or things like that, you got real struggles there if you picked a couple individual stocks, but it happens. Yeah. I would sort of further add to Mr. Investor there. The shows that we do, the Doe Show and things like that, a lot of times we'll focus on prepping your mind for that decline. Once you're confident in the investments, and that's the key thing, right? Because we could debate all day whether, a falling market is a good market. Once you know you have the right investments and you're dialed in efficiently, then you don't mind the markets falling. But I certainly understand a lot of people that tune in and go, markets fell like crazy, what do I do? You're just not confident or don't sort of have that knowledge about the investments that you own. Once you have that knowledge and you start to gain experience and go through a few of these, then it really becomes a lot easier. The market declines get you excited to add more. It's sort of an interesting thing. You'll get there though, don't worry about it. You don't worry about it. We'll help you in the meantime. Okay, that's all I have for you. Like I said, kind of a non-event day, but there's a lot under the surface that does not look good. Banks still don't look good. A lot of the tech names don't look good. Russell 2000 doesn't look very good. You've got everything sitting near lows. There's a chance they poke down underneath yesterday's low. Try to come after that again. See if there's any stop losses in there. Think about everybody that bought yesterday after seeing that reversal. Where are they all going to get out? Where are the short-term traders going to put their stops? Right under that low. So just know that there's a chance that we pop underneath that thing and it gets a little wild for a while. But hey, by now, you guys are used to the wildness. And watch what happens, by the way. When the markets slow down and just start trending up or down, whatever happens, when the markets slow down, all of a sudden you're going to start saying, what happened? Why isn't the markets moving? Why is it broke? Remember after February, everybody's going, why are the markets moving so slow? It's so boring. That's what volatility does to you. So you're used to it now, but we'll see what happens. Start a merch store, man. Like I got enough to do around here, man. I'll tell you what. Anybody that comes by right now, it's a war zone. We're building it up, but I'm building this place. I'll do a tour or something when we're done. This is a massive warehouse that I'm in right now. And once we've built it out, I want this to be a place where when you're in town, you can come by and be on the show. You can come help us out. You can come be a part of it. And I'll tell you what, when people come by, we've got coffee cups, hoodies, shirts, and things. Then we'll talk about it. But if you're one of our customers, that towel is always yours if you get a little nervous. It's a little mini towel that says the markets recover 100% of every decline, 100% of the time, so that when the markets fall, there's no reason to really sweat it. Get it? The little towel, sweat it. Yeah. Anyways, if you're one of our customers, I haven't sent one to you and you'd like to have it, let me know. Happy to send it to you. For the rest of you, enjoy the rest of your day. Tomorrow, nope, not yet. We'll talk about it tomorrow. See you then.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.